All right. We are back again for another real estate class. Hope everybody's doing all right out there. It's Friday, so we going into this weekend strong and give you guys some of this information on how to get into real estate, different ways to get into real estate and things like that. So, per usual, I'll go ahead and I'll bring up the slides and we'll run through them and then we'll open up a Q&A at the end. If you guys have any questions on what I covered, you guys feel free to ask me whatever questions you guys have, or if you guys have any other real estate questions, or just any questions in general off of the different things that we talk about, whether it be things I talk about on my social media, things we talk about in the Well Squad, things like that. So let me go ahead and share my screen with you guys and pull this stuff on up. Give me 1 second. Get that on out of there. All right. All right. So today's agenda, like I said, I'm gonna show you guys how to invest into real estate with as little as $5. Um, if you guys have missed any of the previous classes, we've covered a lot so far. We've covered, the benefits to real estate, as far as taxes, appreciation, leverage, how it could be passive income, what type of expenses to expect with real estate, because you are going to have expenses, right? It's not just money coming to you. If you have tenants and they pay you money, it's not like you get to just pocket that money. You do have expenses. So if you take out any type of loan, you're going to have that principal and interest. You're going to have taxes on your property every year, unless you're a veteran or if you're somehow exempt from taxes. You're going to need insurance. You're going to pay utilities, whether if you pay them or if you put it on the tenants. You're going to have maintenance issues. Things are going to pop up and other little things here and there. If you have yard, if you have any parking, if you have any storage, if you have any uh, separate areas for washer and dryer, or if you offer any services, you can expect those type of expenses. So we've covered that. We've covered out how to figure out how much property you can afford, because this is a big question, and this will help when it comes to running your numbers and trying to figure things out. If you're looking for $1 million property, but you should be looking in the $500,000 price range. If you don't know that, go back, check that out. I tell you guys how you can figure out how much you can actually afford, where to find a property that matches your needs. So now, not only do you need to find a property that you can afford, but you need to figure out one that will match what it is that you're trying to do. Are you looking to, get that passive income? So does that mean you need more doors, or are you going to have to rent out? If you get a single family home and you have extra rooms, are you looking to rent those rooms out to bring in extra income? Are you going to use your property, for events and charge people, things like that? So you need to figure out that the property that you're trying to get, does it match, what your goals are and what you're trying to do. How to find a real estate agent. We cover that. What to expect from a home inspector. You don't have to get a home inspection, but it's very highly recommended. And I talk about why it's recommended to get a home inspection. And we actually even have people that have attended the classes that didn't get home inspections, and they tell their stories, their horror stories, to the downside to not getting a home inspection. We talk about how to find mortgage lenders, what they require, what to expect with them. If you're looking to get property managers, if you're looking to invest out of state, or if you're looking to invest in a property and you don't want to handle the day-to-day issues, to talk about how to hire a property manager so they run that for you. Financing real estate, that's a big part. While a lot of people try to stay out of real estate, they think they don't have the funding, they think they can't afford it, they don't know how to find different people to help them finance it. So we cover that. Their first time home buyer program. So we've covered 5 states. We've covered Texas, we've covered Florida, we've covered Cali, New Jersey, and Georgia. So if you're not in those states, and you're curious to see what type of programs they offer, because every state offers something different, or if you're in those states and you're curious, or if you have a family member or a friend, you can go back, watch those slides, gather the information and pass it along, or do as you please with that information. Running your numbers, that's a big part of real estate. That can make a big difference if you profit every month, or if you're in the hole every month. So we cover how to run your numbers when it comes to real estate. I gave you guys some updates on different properties and different things that I'm doing within my real estate journey. It never stops for me. Hopefully it never stops for you guys either. It's a great tool to build generational wealth, and a great tool to give yourself some extra income if done correctly. I brought on a guest. I had JF on here. He offers a free wholesaling guide. If you guys are into wholesaling or looking to get into wholesaling, he offers a guide. If you guys go in the real estate chat, he pops in and out of there sometimes and he drops that. Or if you just want to connect with him, he offers coaching and all that stuff. Brought him on for a class. Broke down multiple different properties. Went over, everything that I kind of talk about. I found some properties and kind of broke them down for you guys so you guys can get a better picture and kind of see how that looks. Something else that I've done and that I talk about is getting properties from auction. I recently got one a few months back from auction. I'm looking to get a few more. Was in an auction not too long ago, didn't win it, and things like that. So talk about how to do that. We talked about conventional loans. It's another way for you to get into real estate with either 3% or 20 to 25%, depending on if it's a first home or not, if it's an investment property or not, what lender you go through, what your credit is, all that good stuff. We talk about that. We've covered other investment properties, like I said, and then we've covered more first-time homebuyer programs. So the state that I did the last time, I actually can't remember. I do so many of them, but you guys can just go back on there. Like I said, that's all uploaded. It has the title for where I did it at, and you guys can get all that great information. So today, like I said, I'm gonna talk to you guys about investing in real estate with as little as $5. So this is no gimmicks, no secret about it. Some of you may know this already, and some of you may not know. So hopefully you guys stick around for the ride and get this information and use it as you will. All right. So this is a way for you guys to invest into real estate with as little as $5 or less, depending on the REIT. So I don't know if you guys have ever heard of this or not. Some of you may be familiar with it. Some of you might have heard the term before. Some of you might even be invested in some REITs right now. So maybe I can give you guys some information. Maybe this might be new for some of you, and maybe this might give some of you more information into REITs besides just investing in it just because you've heard about it. So I'll kind of break down what it is. I have some REITs at the end where I'll kind of explain more to you guys and show you guys how to get into it and all that good stuff. So let's dive on into it. So a REIT is a real estate investment trust, is a security that trades like a stock on the major exchanges and owns, in most cases, operates income producing real estate or related assets. Many REITs are registered with the SEC and are publicly traded on the stock exchange. These are known as publicly traded REITs. Others may be registered with the SEC but are not publicly traded. REITs receive special tax consideration and typically offer investors high dividend yields, as well as a liquid method of investing in real estate. So this is one of the things I love about REITs is that, one, you're invested. It's another way for you to invest in real estate and still reap a lot of the great rewards, especially depending on what REIT you invest in, right? There's a lot of different types of REITs, and we're going to get into all that. I'm personally invested in REITs right now, and I'll tell you guys which ones I'm in and why I like them. But like I said, it's a good way. It's another way for you to get into real estate and be invested in real estate without having to do the headache of, finding tenants, finding property managers, finding realtors, doing all these different things. And you actually, a lot of REITs have great dividend payments that they pay. Some pay monthly, some pay quarterly. So we'll get into all that as well. So REITs, which are structured as a corporation, are not typically taxed at the entity level, which allows investors to avoid double taxation on dividends, which is great. REITs must invest in real assets and derive the majority of the income from real estate activities, so including rents from properties and interest from mortgages. The REIT must also pay out 90% of its annual taxable income in dividends. So due to this structure, they typically pay out a higher rate of dividends than equities or many fixed income investments. Dividends received from REIT holdings are taxed as regular income, which is great. Like I said, so you don't have to get that double taxation. So a lot of REITs will have some great dividend payouts. Just because it's a great dividend payout doesn't make it a great investment, right? You still have to do your due diligence. You still have to learn how to research, read the company's financials, things like that. And we have different classes. We have a whole stock section that teaches you guys how to do your research, how to do all that stuff. So it's great to put the two together. So Here's some of the benefits of REITs. Potential for a higher yield. So REITs typically pay a higher dividend than common equities. REITs are able to generate higher yields due to, in part, to the favorable tax structure. So that's why you guys will see a lot of REITs with great dividend payments. These trusts own cash generated real estate properties. Another great benefit is inflation hedging. So REITs can serve as an effective hedge against raising inflation rates. So in particular, REITs with commercial holdings, for example, frequently have agreements that allow them to raise the rents in tandem with inflation. So, when inflation rises, they have certain clauses in there that are able to match whatever inflation is. And a lot of the commercial holdings have really long tenures. They have long agreements. So there'll be, a 5-year, a 10-year, 20-year, some are even 30, 40, 50-year agreements, depending on, where it's at. Accessibility. So REITs are typically listed on the national exchange and provide investors considerable liquidity. These securities invest in a portfolio of commercial real estate assets that are not typically available to retail investors, and diversification. So this is another great thing. So REITs can provide diversification benefits because they tend to follow the real estate cycle, which typically lasts a decade or more. So whereas bonds and stock market cycles, they typically last an average of, a little over 5 years, close to 6 years. So just like the benefits, there are going to be risks, right? You can't just have all benefits. It just doesn't work that way. So here are some of the risks when it comes to REITs. So you have real estate risks. So REITs closely follow the overall real estate market and are subject to much of the same risks, including fluctuations in property value, leasing occupancy, and geographic demand. So a good example of a REIT that got hit hard and still wasn't able to recover, if any of you guys have your phone, or if any of you guys have something, or if you just want to write this down, the ticker symbol is NYMT, New York Mortgage Trust. They were a REIT. They were pretty steady for a while before COVID happened, and they paid a great dividend, and they were pretty much going steady for a really long time. And then COVID happened. They took a really hard hit, and they still haven't recovered to pre-COVID levels, whereas a lot of other REITs, like SPG, for instance, recovered really fast and was able to maintain their dividend payments. NYMT actually cut theirs for a while. They came back. It was actually a lot less than what it was because they took a really big hit. So like I said, there are risks to this, but like I said, there are a lot of good rewards. When things are going good, it's going great. So the interest rate risk. So real estate is typically very sensitive to changes in interest rates, which can affect property values and occupancy demand. The business risk. So REITs can be highly susceptible to the underlying business or industry that leases the properties. So, if, like, for instance, when what's the big company that just went out recently? I think it was a lot of JC Penney's were closing, when Payless shoe stores was closing. They don't own those buildings that they're in. They lease them from somebody. They lease them to big companies like SPG, if they're in an SPG owned mall, or whoever owns that mall. You guys have to take that stuff into consideration. So a lot of REITs got hit hard when this COVID happened because so much shut down. And when you're talking real estate, right, in order for it to make money, it needs to be open. You got to be able to charge rent. You got to be able to collect rent, all that good stuff. So like I said, there are some risks to it. Occupancy rate risk. So in order to maintain the payouts, REITs must maintain certain occupancy levels. This closely ties in with the amount of rent that these properties are able to command. Lower rents and occupancy rates may negatively impact REITs, right? Kind of just like what I was talking about. Geographic risk. So REITs can have a narrow geographic focus where the majority of the property is located in a particular area or region. So here goes some of the type of REITs that you guys can invest in. And like I said, I'm going to give you guys some examples so you guys kind of see what's what. So there are two main type of REITs. So you have equity and you have mortgage. So within equity REITs, there are categories.
Who's coming?
Let me mute this person, whoever that is. All right, they stopped. All right, so equity REITs. So equity REITs own and manage properties and collect payments from tenants. Healthcare REITs, they own and operate properties that focus on the healthcare industry, including hospitals, medical centers, and nursing facilities, right? I know a lot of people probably think that, the hospitals own that building that they're in, but like I said, everything, it's a big money game out there. People think that, these stores in the malls own that space, and when you go to the outlet malls and stuff, they're all those businesses that are in there rent from those locations. So if you've gone to a mall, for instance, and let's say you've been going to the mall in your area for the last 10, 15 years, and that same store has been in that same location, let's say like a Champs or something like that, or a Macy's. They're constantly paying someone every month to be in that location. And there's a way for you to invest into that company that owns the malls and owns that. That's through REIT. So, and you can do it, like I said, with healthcare and all these other areas that we're talking about. So commercial REITs own and operate a variety of commercial properties such as shopping malls, office buildings, data warehouses. They generate income from rents received from tenants. You also have mortgage REITs. So these invest in mortgages and derive their income from interest payments. You also have residential REITs, and they own and operate a variety of residential housing properties. These include multifamily apartments, student housing, and even some single family homes out there. So a good amount of different type of REITs for you to invest in. Like I said, it's up to you to decide, if there's one specific category that you want to invest in over another, or if there's one industry that you're looking at getting into over another. That's going to just be on your preference, your due diligence, what you see, what you find, the information that you get from those specific companies. Here go some examples of some of the REITs that you can invest in. So here are the ticker symbols. Like I said, you guys can plug these in. If you guys have the stocks app on your phone or whatever platform you guys use, if you guys want to do research, you can look and find these. So NLY is one of them. Like I said, they right now, when I did this and put this together, they were at $8.53 per share. They have an annual dividend and a yield. So their annual dividend is 0.88, so 88 cents. And their yield is 10.29%, 10.29 percent. And then it's 0.22 cents per share quarterly. So for every just to kind of give you guys an example, so for every stock that you own, so if you were to just buy this one, and I know I have one on here for you guys that's under $5, that's kind of down towards the bottom. So let's say if you wanted to buy a share of this, right, it costs you $8.53. This was today. This price is probably different by the time the market closed or whatever it may be, but at the time it was $8.53. So if you wanted to buy one share of NLY quarterly per share, you're going to get 22 cents of that. And then on the year, if you were to just have one, that's going to be a total of 88 cents that you get per year that you own this stock, unless they were to change their dividend, whether it be they were to increase it, or like I said, when COVID happened, some of them actually decreased it. And you can, like I said, you can monitor this, and you can go look this company up and figure out exactly what quarter they pay out. I didn't put it on there, but like I said, it's quarterly. So every 3 months, by owning a share of this, you're paying yourself. And that's what we talk about, get money, buy income. That's one of the ways that you can get money and you're buying income, because by owning a share of this, they're paying you to own it, right? There's a lot of stocks out there that won't pay you to own any share. And this is just a great way, if you can find a good entry, to get into any of these. Not necessarily these are just examples. Like I said, I'll let you guys know which of these I own. I'm not saying go buy any of these or that these are great. You got to do some research and figure out, like I said, what looks good to you, what works off of your strategy, and what looks good for you to buy into. So I'm just kind of throwing these out there as an example, just so you guys can get a general idea of what some REITs are. So AGNC is actually a REIT that I used to own. So there's, let's see, AGNC, SPG, NYMT, and O are all REITs that I've owned at one point or another, but now I just currently own SPG, and I'll kind of explain why. So yeah, AGNC, as the time I was putting this together, was at $16.02 per share. And they pay an annual dividend of $1.44 per share. And they have that's a yield of 8.99%. So, and they actually pay monthly. So you get paid monthly by owning one share of AGNC for $16.02. You would be getting 12 cents per month that you would get, or $1.44 annually. And so if you get more shares, so let's say you were to get 10 shares, you would just multiply 144 times 10, or times however many shares you bought, and that would let you know what you'll make annually. So you would get $14.40 annually if you were to own 10 shares of AGNC. OHI is another one. Like you guys can see, I just kind of put what the annual, I put the current price that I was doing the slides. what the annual dividend is and what the yield is, and then what you would get either monthly or quarterly. So there are some REITs that will pay you monthly. There are some REITs that will pay you quarterly. And then you guys, like I said, when you're doing your research, and some people have this set up to where they get paid every single month. So if you were to own AGNC and O, you know that you're going to get paid monthly because they pay monthly. And then if you own any of the other REITs, if you want to try to schedule it to where you get paid every single month, if you don't want to own O and you don't want to own AGNC, then all you would have to do is look at the payouts for each of these REITs, and then just get a REIT that matches, your due diligence, and you check their financials and that look good for you, right? So if one REIT pays January, it's not going to pay you again for the next 3 months, right? Because it's every quarter. So then you would want to find a REIT that pays you January, then you would want to find another one that pays you February, another one that pays you March. So that way, every single month, that you're going to be getting paid, because if they pay quarterly, that's going to be 4 payments that you're going to get. And if you have 3, that's going to cover you for the year. So you got different ones that pay you out on different dates. Or if you don't want to, worry about trying to find that, then you would just invest in some REITs that pay you monthly. And that way, okay, I'm getting paid every month. And right now, agency is not a bad price, to get paid monthly. And then you guys can also see these all have different yields based on, what their price is right now. And they just all pay differently. So every company is going to be different. Like I said, they pay different times. They pay their dividends at different times, and then you can reinvest your dividends so you can get that compound interest going, right? So it's called DRIP, where you can turn the DRIP on, and from your guys's whatever brokerage you use, most of them give you that option to turn the DRIP on, and that just puts it back into the stock. So you get more stocks, you get more shares if you turn that DRIP on and let it just keep compounding. Eventually you're going to get more shares, and as time grows, your money is going to keep growing with it. Or you can get it to where it pays out to your account, and then you can do whatever you want to do with that money. There's a lot of good things that you can do with dividend payments. A lot of lenders will allow you to get into real estate by using your dividend portfolio. They all have different requirements on what they require, how long they want you to have the dividends. They're going to want to look at different things. But if you have there's a lot of people out there that have $50,000 plus in annual dividends that they get, and they just use that as their proof of income when they want to use lenders and they want to get into real estate. So it's like it's funny because it's a cycle that doesn't end. So it's like you put your money into these REITs that pay you these dividends, and if it's enough money for you to turn around and use to leverage to get into real estate. So it's like you're using real estate to leverage yourself to get into more real estate. So instead of the REITs, instead of it being on the stock exchange, you're having physical properties, and then you can do those different things. So it's really cool and really creative what you can do. And it's like a good way for you to, build your income, right? Get money by income. That's what we preach. That's what we talk about. It's a great way for you to get into real estate without having to do any of the work of finding realtors, finding agents, finding lenders, finding tenants, finding builders, finding this, finding that, right? So it's just another outlet. Like I said, these are just all examples of some REITs out there. There's a lot of different REITs, a lot of great REITs to get into. So you guys just get out there, start searching, start researching, and see, what catches your eye. Do you want something that's, yield heavy? Are you looking for something that's great yield, great price? Are you looking for growth? Are you looking for something that you want to invest in for a long time? SPG for me, I don't ever see myself selling SPG. I constantly add it. I bought it in the middle of COVID. I was able to get it for like 50 something, 50 in the high 50 range, low 60 range. I kind of went heavy on it. And you guys see it's already doubled. And it still was paying its dividend out at the time. And they actually just recently increased their dividend payment. SPG, Simon Property Group, they typically own a lot of the outlet malls. So if you guys have an outlet mall in your area, if you guys go where the sign is at, they'll usually have an SPG sign. They even own some malls and things like that, and they're doing big things. I really like them myself. But like I said, to each its own. So you guys are probably wondering, well, hey, if you don't know anything about REITs, don't know anything about the stock market, you're probably thinking, well, where can I even invest in something like this? So you can open up a brokerage account. It's not going to cost you anything to open up a brokerage account. It is going to ask for some personal information, right? You're going to need your social security number. They're going to ask you some questions, things like that. But it doesn't cost you anything to open up a brokerage account, and then you fund it when you're ready to fund it. After you find some REITs that you feel like you like, then you can just go ahead and buy them through your brokerage account. So it's very simple. Most people can do that. It doesn't take much. And like I said, very, very easy. We actually have classes on, how to open up a brokerage account. We have show you guys different ways how to do research and do your due diligence on different stocks and things like that. So the same applies to REITs, right? When you're looking at charts and things like that, a chart is a chart. It doesn't matter if it's a REIT. It doesn't matter, if it's just a regular stock, S&P 500, if it's whatever it may be, or whatever category it falls under. Doing your research isn't going to change much. It's just going to be based on your strategy and what you use when you do your research. So here are some brokerage accounts that you guys can use. TD Ameritrade is great. Charles Schwab is good. Fidelity, Webull. There's a lot other brokerages out there. You got Vanguard, you got the RH one that I don't even want to promote just because of all the shady stuff that they do, but you guys know what I'm talking about if those of you guys that do know. But yeah, so very simple, very easy. Like I said, NYMT at the time I did this, which was earlier today that I pulled the information for this one. So September 10th, 2021, it was $4.28. So like I said, that's a good way for you guys to invest, and you are invested in real estate. That's when you invest into a REIT, that's exactly what you're doing. And so here are some of the platforms for you guys to do that. Very simple, very easy. Doesn't cost you anything to open up a brokerage account. You just have to pay, if there's any fees that they have for you to buy a stock or anything like that. Most of them have went away from fees, since so many of them offer it now for free for you to, buy and sell stocks for free. But like I said, every platform is different. Just look and see, and go through, read everything, and you guys will be good to go. So right now we'll open it up for the Q&A. Like I said, if you guys have any questions on REITs, if you guys have any questions, this would be the time for you guys to go ahead and ask me questions. So it's an open floor.
Oh, somebody kids.
I had a question about to starting back for I got and about reduced so and I'm just trying to how did you wanted to and when you were starting out?
I don't know if it's my side or if it's yours, but I'm sorry, you it kind of would sound like a robot a little bit. Can you try to ask that again? I don't know.
Can you hear me now?
I don't know if the connection is bad or what. But I couldn't really. Okay, everyone else heard it as well. So I don't know if the connection is bad. But yeah, they said in the chat ask it in the chat. I'm reading the chat right now. All right, while she's getting ready to type it up, someone said T-Pain, you guys are funny. You guys can go ahead and try to ask another question.
Yeah.
Does anybody else have any other questions out there?
I'm sorry. Can you guys hear me a little clearer now?
There we go. There we go. They was over here. They were saying you sound like T-Pain.
Oh man.
The internet was breaking in and out, but we got you now. We good. What you got?
Okay, so I went to your last webinar, and you were doing like the talking about rental properties, and so I had applied for a mortgage, And I
Uh-huh.
was going back and forth between a FHA and a conventional. The other webinar I went to, the gentleman was saying that he wished he hadn't gone with the FHA because of the PMI. So
Right,
I wanted to take a look at both, right? I
right.
did, and it got approved, but the property I was looking for was like 80,000.
Uh-huh.
And they approved me with some kind of a cap where it's like I can't get a loan under 150. And I
Yeah.
wanted to know if you know anything about something like that.
Yeah, so that's just based off of the lender that you went to, and you probably went to a bigger lender. So unfortunately, when you deal with properties under 100,000, you got to kind of find lenders that do that, and that's going to be typically credit unions or and a lender that's typically in the area. A lot of lenders don't want to give loans for under 100,000 just because they're not going to make as much. And like I said, it's a money game. They're in it to make money as well. So even though they are lending you money, they are gonna, get money from you. They're just not gonna get as much. And they know it'd be a lot easier and quicker for you to be able to pay down the interest when you're getting a loan for that amount, because you're able to get a lot more in rents. Like for instance, for 80,000, I could find a property over in the Midwest that's probably paying me anywhere from 1,500 to 1,800, just depending on the area. And with an $80,000 loan, you're not paying much monthly, so you'll be able to literally just put it all towards your principal to get that taken down a lot sooner. So that's why a lot of lenders don't want to lend under 100,000, just because they can't make that much money for it. But it doesn't mean you can't find a lender that will. So you're just going to have to take time, do a little more research, and find a lender that will work with you for that price.
Okay, and I had one last question before I go. As far as the property, this was a duplex, and that's why I was interested to rent the other side out, right?
Yeah.
So, do you think that it would make sense if I can't find a lender, because I'm kind of pressed for time with the whole running the credit thing too.
Right.
I only have 14 days.
Uh,
Does it make sense to maybe just switch to the FHA versus the conventional? Just
you could be having to pay more money, like I said, because you are going to have the PMI and things like that. So that could be taken away from your your bottom line of things. So really just run your numbers and see what makes sense. And like I said, you don't want to miss out on the deal, but then again, you also don't want to rush the deal, because you want to be giving yourself, every advantage that you can. So it's really just going to be up to you. If you just want to bite that bullet for a little bit, say, hey, let me just hold on to it. But then do you plan on living in it, or do you just plan on wanting to rent it right away?
I'm just gonna want. It's already rented. Both sides are already rented.
So if you go FHA, you're going to have to live in one side for at least
Okay.
1 year. So so take that into consideration as well.
Okay. Thank you so much.
When you guys use, and for all of you guys out there that don't know, when you use FHA, it does come with PMI, but it also requires you to reside in the resident for at least 1 year before you can move out or anything like that. So keep that stuff in mind. That answer your question?
It absolutely does. Thank you so much.
All right, you're welcome. Someone said, where can we look up the payout schedule for the REITs? So you can go on Yahoo. They show a lot of information, but I use one of my brokers that I use is TD Ameritrade. I like them a lot because they'll show you the payout schedule. They give you all the information that you guys need. So I like them a lot using them. There's a lot of ways, but those are just 2 quick ways for you guys to do it. Like I said, it's not going to cost you any money. You could just open up an account with them and not even put any money in there, just to use it to get the information, because they actually have a lot of great information on TD Ameritrade. They're not even my main brokerage account that I use. I like to use them because they just have, like I said, you guys would notice if you guys use these different platforms, you'll have little things that you like with this brokerage account versus that brokerage account, and you'll use it for different things. So just go ahead and use that, and that gives you all the information you guys would need. Another question someone said is it best to set up a complete separate account just for REIT investing? That's really going to be on you. Like I said, you can have as many brokerage accounts as you want. There's so many of them out there. It doesn't cost you anything. Your tax person might charge you a little more by having, all these different brokerage accounts, as mine does. But like I said, get with your CPA, ask them, hey, will you guys care? Are you going to charge me more if I have multiple brokerage accounts? And then, like I said, it's really your preference. So I have some accounts that I just do for swing trading. I have some accounts that I do for just options. I have some accounts that I use for this and that. So like I said, it's just going to be what your preference is. Another question someone asked is, are REITs better than physical property? Yeah, I don't want to say one is better than the other. They both have their pros and they both have their cons. So you're just going to have to kind of weigh it out. You know, when you have physical property, you know, you're more hands-on, you got to do a lot more. And then also the reward is a lot better and the things that you can do as far as leverage. So the only leveraging that you can do when it comes to REITs is that you can leverage your dividend portfolio, but it takes time to be able to do that. I know most lenders require 2 years, and then you also have to have, you know, the amount in there to cover whatever it is you're doing. So when it comes to physical property, you know, you're building equity up. You can get creative. You can do HELOCs. You can refinance. You can rent it out to get more income, you know, as rents increase and all these different things. So it's really going to be just more of what's your preference. Some people don't want to deal with the people side of things. And, you know, so they just go the REIT route. So where you don't have to worry about any of that. So it's going to be a case by case person on, you know, what they like and what they want to do. Will you elaborate on investing in REITs and leveraging one person real estate? So kind of like I just said, so you'll have to get with the lender. Just, you guys can reach out, call, you know, Google a lender in your area. So if you guys live in Chicago or Atlanta or Seattle or Houston or whatever, Google lenders in Seattle or Houston or wherever you're at, or just any lender, and say, call them up, say, hey, I'm looking to get into real estate. I want to use my dividend portfolio income to, you know, put my down payment down. What do you guys require to use dividend payments as a form of income? And then they'll tell you guys that. And it's really as simple as that. You mentioned you sold other stocks and are heavy on SPG. Could you say more? Yeah. So it's crazy because I actually got away from REITs before the pandemic happened, just because I was focusing on options and things like that. And then when a lot of REITs got hit, I didn't really I knew that growth was going to come back and a lot of them were going to kind of get to where they were at, but SPG was the one that stood out to me the most. And the reason it stood out to me the most, because malls were still the only thing open. So when everything else was closed, malls were still open, and most of the malls that I were going to, SPG owned, right? So that was just kind of common sense to me. Doing my due diligence, everything was set up nicely. They were still operating the exact same as they were, right? Numbers were obviously a little bit less because some stores required more than others, but I just kind of put common sense together. Same thing when it came to Starbucks. When I went heavy on Starbucks and screamed from the roof from my social media, buy Starbucks, because Starbucks was still open. How it was considered essential, I don't know. McDonald's was still open. Walmart was still open. So all these companies that were still open, I was going heavy on. And, you know, I end up reaping those rewards for it. I'm out of, you know, all those positions I just told you guys before, but I'm still in SPG because, like I said, that showed me a lot. So if we were to go into another lockdown, you know, I know that these malls and stuff are going to remain open because they allowed them to do it before. Why wouldn't they allow them to do it again? Especially when we were at the height that we were, and then also their financials, their numbers, everything looked sense from my due diligence. So it honestly seemed like a no-brainer. That's why I'm still in SPG. And that's to answer that. Tell him congrats on his new home. I saw his post last night. I was blocking Twitter and IG on my phone. Simply put myself on timeout. I can stay focused. I'm done bullshitting. All right. Yep. I'll let him know. You said congratulations on his new house. Yep. I'm under the age of 21 and have new credit. How long would I have to wait before buying a property? You don't have to wait at all. You can use a program called NACA. They don't check your credit. They do have a lot of stipulations that has to remain as your primary resident, but they don't check your credit. FHA is a lot more relaxed when it comes to credit. You can have as low as 500 to qualify for FHA, but they will require a 10% down payment versus the 3.5. So you got to get your credit up a little bit more to meet those credit criteria, to meet the 3.5% down payment. And then once it gets even better, you can start looking at the conventional route. The conventional, they do offer as low as 3% down payment, but they require a higher credit score. They require you to have more money in the bank after the deal is closed, and they just have higher stipulations. So you definitely don't have to wait to build up your credit. You do have outlets. You do have first-time homebuyer programs. that, you know, are a lot easier on your credit and things like that. So you have multiple outlets. And like I said, just you got to get out there, do the research, go through these classes. I talk about a lot of that stuff already, but you do have outlets if you don't have great credit and things like that. So if you guys have any other questions, you guys can ask them on here. Like I said, I just went to the chat. You're welcome. I just went to the chat just because that one person's connection was pretty bad, but you guys can ask questions on here if you guys want to. Cool. Do you guys got any other last questions for me before we wrap this on up? Can you do a class about buying real estate in North Carolina? Yep, I will. We actually have a lady in the group. I don't know if she's in this class right now. She's in the North Carolina area. She's supposed to have her realtor license. I hope she has it now. So I want to have her on so she can talk to you guys about that process. And then also if any of you guys want to invest in the North Carolina area, I'll get her on here and we can drop some gems for you guys. NACA, NACA for the no credit check. You guys are welcome. Nope, I don't own any real estate overseas, but I'm actually heading over to Europe next month. If you want to get connected with me, just shoot me a message. We can try to get connected, but I'm actually going to link up with somebody out there in Germany that has some real estate, and I'm going to try to get connected with them. Just take a look at a few properties, not saying I'm going to buy anything, but just going to get out there and look. I'm not going out there specifically for that, but while I'm out there, hey, you just never know. And, you know, when I was living out there, tell you guys a quick little story. There was this girl I knew. Her dad was German. She was American. She was in the military. She didn't have a relationship with her dad. She actually happened to get stationed in Germany where her family lived at. She was like an hour away from her family. She finally got reconnected with her dad, and he had cancer, and he ended up passing away. And when he passed away, he left her a fourplex, and it was paid in full. I think at the time, it was bringing in maybe about 2,500 euro at the time, which was maybe about $3,000 a month is what it was bringing in free and clear. And this girl had no idea about real estate. She didn't want to deal with the stress of it. She was about to move back to the States, and she did the horrible thing, not horrible, but she ended up selling it. And I think at the time the property was like, I don't know, 280, 300 grand. And now it's worth almost $1 million because this was a while ago. So man, if you guys get some property handed to you guys, you know, try to look at every route you can to hold on to that property. You know, if you're in a financial situation and that property is free and clear, you know, look to do a HELOC, look to do a cash out refinance, do whatever you can to hold on to this property because, you know, they're not building any more land, right? They're not building any more land. So if you guys can get your hands on some stuff, it's going to be a good way for you guys to continue to pass on, keep in your family. You know, if you guys have, you know, grandparents or whoever passes away that has land and property, you know, I'm not here to tell anyone what to do or say it's not a good decision, but man, hold on to that stuff because property value is not going to do anything but keep increasing. Land value is not going to do nothing but increase over time. You know what I mean? 5, 10, 15, 20, 30, 40, 50 years down the road, someone could say, man, this was my, you know, my grandfather's house. You know, I'm talking about you guys. This was my grandfather's place, and, you know, it's still in the family passing it down. So that's one thing that I noticed about when I lived in Europe is that a lot of the families stayed in the same home for generation after generation after generation. And it's a great way for everyone to build wealth because if you don't have to worry about that mortgage payment, if you're living at home with your mom, your dad, your grandparents, siblings, or whoever, you know, everybody's working, everybody's bringing in income, and it's a good way for people to leave the nest, you know, sooner, right? In their early 20s, instead of having to worry about being forced out, you work, you save up your money, it gives you a good nest egg to go get your own house. And then now you start that generation that your great grandfather did for you. So it's like, do this stuff now. That way, you know, 60, 70, 90 years from now, someone could be like, yeah, my great grandfather or my great grandma, you know, held it down. They, you know, took that dive into real estate. Now we're passing this down onto our family. So just keep that stuff in mind. Someone said, how can we message you? Just message me on Discord. That's fine. I always answer everyone on Discord. If you guys send me messages on Instagram or Twitter, it's so hard to get back. There's just too many messages. So I always check my Well Squad. So I'm always making sure I get back to you guys first. So if you guys are Well Squad members and you do message me on Instagram or Twitter, it's not that I'm ignoring you. It's just there's so many messages I don't even have the time to go through them, but I do go through all my messages on Discord. If you don't mind, how many stocks of SPG do you have? What's the goal that you have for your amount? SP, I actually honestly don't know. It's a good amount. I threw a good amount in there. It wasn't no chump change. I didn't necessarily go all in, but I definitely went really heavy in them. So I actually have to go look. I don't even know because it's in an account that I don't even look at. So it's one of those accounts I told you guys I have a long-term investing account that I don't even look at. I don't even have the app on my phone. It's just stuff that I had great positions in and I'm just kind of letting them run. So I don't even know. I don't have 2-year work history, just one, graduated last December. Will I get a conventional loan? You have to reach out to the lender. When you go to school, once you graduate, there's actually a way for you. They don't, obviously, if you're in school, they don't look at, they don't need the work history. They're going to want to see if you have a job, and then you can use that. Every lender is going to be different. So just reach out to a lender, let them know your situation, and then they're going to tell you yes or no. And if they tell you no, ask them what they require, and then just go ahead and knock out whatever it is they require. So they require you to be at a job for another 3 months or another 6 months or a year, whatever it may be. There's nothing you can do, but don't just settle with one lender. Call multiple lenders, because the thing about lenders is there's no clear cut. Every lender goes off of this. Some lenders don't even care about your job history. Some lenders don't care about how much money you have in the bank. Some lenders don't care about all your W-2s. Some lenders don't care about this. Every lender is different. They can make their own rules and do what they want to do. If they're going off of government-backed programs like FHA, they have to at least require whatever those programs require. But other than that, lenders can do whatever they want to do. It's their money. So that's why I always tell you guys, call around and work with different lenders. Someone else's question: do we have any wholesalers in the group? I'm looking for some investment opportunities. Yes, take that to the group chat. There's a lot of people in there who are always looking to do deals. So go to the real estate group chat in the Well Squad, not here on the class, and you'll find some wholesalers in there. I'll shoot you a DM on Twitter. Yeah, you can, but good luck. Like I said, try not to do it on Twitter. It'd be a lot easier for you to reach me throughout the Well Squad. It's easy to just shoot me a message on there. Do you have any courses on first-time homebuyer? No, I don't. First-time homebuyer is really easy. Just Google whatever your state you're in. I like to do these on the class, sometimes just to give the people the information and all that stuff. So you can just figure it out, whatever state you're in, and then you can work with the lenders in there. What brokers do you prefer? I do, it depends on what I'm doing. So I do a lot of my swing trading through Schwab. I have a lot of long-term stuff, a lot of ETF stuff in different accounts. I have, I have six brokerage accounts that I use. So I don't necessarily have a favorite. I like the way how TD Ameritrade is set up. But I use Schwab a lot just because I use them for my swing trading. So like I said, try these different brokerages out. Like I said, it's free for you guys to sign up with them. And that way you guys can see whose platform you like the best, because they all have these, little pros and little cons that they have to them. It's exactly. That's why you heard me say the RH when I was giving the class. I'll never promote them to anybody. So if you guys know what RH is, then you guys already know why I'm not even talking about it. Do you have any insight or direction you can point me to how to become an independent loan officer? Reach out to a loan officer. Google independent loan officers in your area, call them, talk to them, ask them how they became an independent loan officer. You might have to call 10 people, it might be awkward for them, but this is something that I've learned from my journey, is that if you call people and ask them questions, people are more willing to share. People are willing to share as much as you ask them. And I do this all the time. I'll call someone that I've never worked with, a random person, say, hey, I found you online. I'm looking to do this. Can you give me any insight? I'm trying to get creative, or I'm trying to do this, or I'm looking to get information on that. The power of picking up the phone and calling people is still undefeated and unmatched. If not, then, go to good old YouTube, go to all that. I personally don't know. So I couldn't even lead you on a path to that. But I'm sure you can get some great information from, calling around and talking to people and asking them, hey, I'm looking to get into this field. Could you share any information, or even offer them, hey, I'll give you money for your time. If you don't mind, I'm just looking, for a 20-30 minute call. How much would you charge me just to kind of give me information? So, the power of calling someone is still there. Yep. You're welcome. And so you guys know, this is the first time I'm even using the chat. I never even used these in the other classes. I like hearing you guys and talking to you guys. You're welcome. But this is cool too. If you guys feel more comfortable typing them up, I guess I'll start pulling up the messages so I can see what you guys are talking about in the chat. But I like hearing you guys and talking to you guys. It feels more like I'm interacting, but it is what it is. I'll make sure you guys get the information no matter how we do it. Cool. You guys asking some good questions. You guys got any last questions for me before we wrap this up? What are your thoughts on purchasing properties through auctions? I like it. I had a great experience with my property that I got through auction. I talk about it a lot. I talk about it in most classes that I've done since I did it. It's pretty clear and cut. Most auction websites, like auction.com is one of them. They require you to send in, some of them might be a couple hundred, $200, $300, $400, $500 to reserve your slot to be able to bid. That money will go towards, if you win, it will go towards your winning bid. So it doesn't, or if you don't win anything and you want your money back, you can get your money back. You have to wire it through your bank. So you'll probably have that $20 wire fee and things like that. Then you find the property that you like. It's always recommended to where if you're going to bid on a property, make sure it's a property that you have seen, or else you run into the issue that I ran to, and you'll have a crazy property that has holes in all the roofs, leaks in the floors and all that, and needs, $50,000 worth of work. But if the numbers make sense, and you know how to do your due diligence, and if you have contractors as friends, and you have some skin in the game with real estate, and you kind of can tell based off the numbers and comps in the area, what your bottom line number is, what the max you can bid based on how much work you think you might need to put into it. It could be a great way for you guys to build some income. What I did with the property that I got was I bought it for dirt cheap, under, I think it was like 60,000 under what the ARV, the after repair value was. And you can get that from comps in the area. So I was able to do all that online. It was in an area that I didn't even live in. I never even flew out. I never even looked at the property, and I was able to turn around and list it. I didn't do any work to it. I just listed it for sale, and I was able to make a little over $9 grand more than what I paid. And then, after taxes, the realtors got their cut and all that stuff, it ended up coming out to like a little over $5 grand that I ended up profiting after two months of my time, of not even really my time, of just reaching out to, got on the phone call a few times with a property management group, reached out to a couple of realtors a few times, text, call here and there. It didn't take much time on my work. And like I said, $5 grand, 2,500 each month that I was able to profit. So yeah, it can work out good if the numbers make sense. Can you do a class on properties through auctions, tips and tricks you do or have heard that work? Yeah, sure. I'll do that. I'll add that on the agenda for you guys. Well, I'll just pull up everything that I did so you guys can see all the numbers, all the paperwork. I did have to get lawyers involved. I did have to get some stuff certified. What else did I have to do? Yeah, so I'll just kind of break through all that stuff with you guys. I did reach out to a property management group. I had a referral of a realtor. So it was a realtor I've never worked with, a property group I've never worked with, a real estate lawyer I've never worked with. So it was people I never worked with, but everything went really smooth. So I have all my paperwork and all the emails and all that stuff. So I'll get all that stuff, put it together for you guys in a cool slide, so you guys can just kind of see how that whole process went. And I actually took screenshots. I'd be thinking ahead of the time. I actually took screenshots of everything I did to sign up for that website and all the fees and all that stuff. So I have all that stuff to put, because I was thinking about doing a class or a course or something on that. So I'll definitely do it. I don't have a YouTube channel, but Chris and I started a Broken Pieces podcast. If you guys want to go check that out, just go to YouTube, type in Broken Pieces Chris Johnson, and it should pop up. when we get on there, we talk about a lot of stuff. We don't really talk too much business stuff on there just because we talk a lot of business with you guys on social media and here within the group. But I think we will start talking about like some of our deals and start doing that. It's more of kind of a personal, just kind of telling you guys our journey. That's why it's called Broken Pieces. We both come from broken homes, broken families, you know, Section 8, the whole nine. So we just kind of talk about our journey, what led us to where we're at now. We talk about our friendship. We talk about different experiences and things like that. So it's not really business focus or, you know, a certain topic like real estate or anything like that. It's just kind of more of giving you guys an insight to how we got to where we got. But we have talked about kind of doing, you know, a spin side of things to do a different version to where we maybe just talk business and things like that. So we'll see. But yeah, you can, I don't have a specific channel, but you can check me out on his. Along with purchasing properties through tax liens. Yep, I'll cover tax liens and tax deeds for you guys to get that out the way. So, all right, do you guys got any other questions for me? You guys are asking a lot of good questions too. I might have to go to the, I see you guys like asking questions more in the chat than you guys do on here. So maybe I will do the questions more. Y'all never upload the second part of last episode. Yeah, it's, you know, we try to, it's funny because when we did the very first episode, it was like 1.5 to 2 years, I think, apart between when we did the second episode. And you know, we this is just something that we do for ourselves. You know, we have decent cameras and mics and stuff, but it's funny because some people are like, oh, get better lighting or get better microphones, and we don't care about that stuff. We don't care about the lighting. We don't care about, you know, the mics and all that stuff. It's just us two friends just sitting down. You know, we're grateful that we even, you know, have eyes on us, people that even care to listen to what we talk about. So as long as we get our message out to you guys, that's really all we're worried about. We're not worried about the quality of production and all that stuff. It's just not really our thing. Everything we do, as you guys see, we do it on our own schedule, our own times, our own terms. So, you know, it's just a piece of us for those of you guys that care to tap in and listen, and a lot of you guys that can relate. It's just a way for us to get our message out there to you guys. So yeah, we haven't uploaded the second part, and you know, it's just, you know, we get busy and we do all of our own. We set up, we do everything how we want to. So we do our own editing and all that stuff, and it's really time consuming, and it's not something that we have like at the top of everything else that we do and that we have going on. But we will get it to you guys soon. Like I said, you guys know Chris is in Texas right now. He's out there, you know, got his house shopping. I'm gone. You guys know if you follow me on social media, or if you guys see me always posting the Traveler's Guide sale, it's because I'm always traveling. I'm always gone. I'm always on the road. You guys just heard me. I'm going to go out to Europe for a month. And if you guys are curious to how Europe is, or if you guys want to see me do something specific, go ahead and follow me on social media. I'm going to be posting a lot on my Instagram, just stuff I'm doing daily. I'm going to, you know, do a lot. Go hit up like Disney Paris, hit up a couple soccer games, take the channel, you know, over to the UK. You know, they got their underwater train that they got. I gotta, yeah, for all the people in the UK that talk to me, I gotta hit up Nando's. I've been fiending for some Nando's out there, so I'm definitely gonna pop into the UK, grab me some Nando's, and maybe hit up Ipswich and, you know, party a little bit. I don't know, we'll see. But I've definitely been around the block in the UK. But yeah, so I'm gonna be out in Europe for a month, just kind of traveling around, doing different stuff. I got some things I gotta handle. So hopefully, you know, any of you guys that are over there in Europe, hit me up so we can try to link up and do some stuff. I love linking up with you guys and, you know, just chopping it up, hearing all your guys' stories. Everybody has a story. So it's good to link with you guys in person and, you know, hear your guys' story. All right, for sure. Sounds good. Definitely shoot me a message, please. All right, you guys been asking some good questions. You guys got any last questions for me before we wrap this on up? All right, cool. Yeah, I just want to say, you know, I appreciate all you guys tapping in with me on this class, taking the time out of your day. You know, I'm always appreciative of those of you that come in. I appreciate those of you that ask questions. You know, it's always good hearing you guys' stories. So, you know, if you guys do gain stuff from this class and you guys put it to use, please shoot me a message. Let me know when you guys, you know, get into real estate, if you start your journey. So it's always good when you guys share with me hey, you know, this worked out for me, or, you know, this went exactly how you said it would go. And, you know, appreciate, I like hearing those stories. And we're going to start bringing you guys on our lives when you guys do, whether you guys close in real estate or if you guys are in the other groups that you guys attend and you guys have success stories. You know, we want to start putting that out there for you guys. You know, it's always just good to hear people leveling up. It's always good to hear people going after their goals and dreams and doing things like that. And, you know, I know real estate is no easy thing to get into. You know, it's simple, but it's not easy, right? I get it. I remember how hard it was, and, you know, the stress and the what ifs, and this could happen and that could happen. So, you know, that stuff, you never forget, you know, the feeling of things, how things felt before you actually started to get into it, right? Now it's comfortable. Now it's like second nature for me. Now I'm able to, you know, host a class with over, you know, 35,000 members, right? They all don't show up to the class, but I'm able to host these classes with you guys and feel comfortable enough to, you know, teach you guys the things that I know, the experiences that I've had, point you guys in the right direction, and kind of help you guys get on, you know, the financial path that you're looking to get on, because real estate gives you that tool. When done correctly, it can be a great tool towards financial freedom, towards generational wealth, all that good stuff. So, you know, I get excited coming on here, teaching you guys about this stuff and helping you guys out wherever I can. A lot of people have been reaching out to me about deals that they're in and trying to, you know, get info on this and get info on that. You know, I love helping you guys out, especially, like I said, you know, that's what the Wealth Squad is all about, helping each other. There's a lot of times where some classes where there'll be questions that are asked that I don't even know. And we'll have people that are in the class that have experience in that and speak out and say something. You know, I love that stuff because I'm not one person to claim that I know it all. I know I don't know it all. I'm constantly learning. I learn stuff all the time that just blows my mind. And I hear things and I'm like, why don't they talk? Why don't they share this with everyone? Why is this stuff not shared and screamed to the masses? So I'm that person for you guys. Anytime I'm learning something out, I'm spreading the word. I'm passing it along. Hopefully it's stuff that can help you guys out. And, you know, you guys just use that stuff as you guys please. So that's all I got for you guys. If you guys don't have any more questions for me, like I said, it's Friday. We only got like 14 weeks left in the year. So, man, 14 weeks is enough time to start implementing a lot of good habits, start cutting some of those bad habits, and start getting after what you guys want to get after in life. 14 weeks is a really long time, and it's going to pass whether if we like it or not, right? It doesn't matter if you keep saying, I'll do it next week, I'll do it next Monday, I'll do it next year, I'll do it next. The one thing about time is it stops and it waits for nobody. So as you're constantly pushing stuff off and pushing back, that means the next person is jumping in and taking opportunity, whoever that person is that's ready to pull a trigger and get stuff done. So hopefully you guys will jump after whatever it is you want to do and just figure it out along the way. You know, I know we all learn and we all operate differently and we all handle stress and things differently. But, you know, one thing that I've learned from dealing with people that handle stuff well and people that don't handle stuff well, the number one thing that I've always heard people say is that I just started. I just did it, right? I didn't know what I was doing. You know, maybe I could have lost a lot of money, or maybe I did lose a lot of money the first time around, but it taught me a lot of lessons. So that way, the next time around, I knew what to do, what not to do. And every time you do that, you just keep learning, right? Whether it be real estate, whether it be with the stock market, whether it be with starting a business, you know, getting your finances in order, whatever it may be. If you keep going and keep trying, you're going to figure out what works and what doesn't work, versus if you just keep saying next week, next Monday, next month, next year, next this, next that. So just start and imagine where you can be this time next year. So hopefully this time next year, a whole bunch of you guys are like, yep, I got this property out the way. I'm working on this. I'm working on that. That's the goal. That's the name of the game. And that's what we want for all of you guys, because like I said, you guys doing this stuff, you guys scooping up on real estate doesn't take away from me. It doesn't stop me from looking at deals every day. It doesn't stop me from putting in offers. It doesn't stop me from getting real estate. It doesn't stop me from learning, leveraging different things. So, you know, teaching you guys, helping you guys out does not take away nothing from me. So that's why, you know, it's easy for me to go all out on you guys. Let's see. Can we find a copy of the deck in the resource section? So are you saying for the, like, all the other classes or what? I don't know. Can we find a copy of the deck in the resource section? I'm not sure what you mean with that question. Yeah, this will be recorded. It's going to be uploaded in the Wealth Squad University. Yeah, it's just a recording. So it's going to be recorded, and then all the classes get uploaded. So if you guys want to find any of the classes, whether it be on real estate or all the other classes, all of them are uploaded. If you guys go to the Well Squad University tab in the Discord, you guys will be able to see every class that was done, and you guys can go back and rewatch any of them that you guys want to. So our guy Ender, he uploads all the classes and stuff. He's on it really good, and like I said, he uploads all the classes, so you guys can go back, rewatch stuff, and go back and rewatch all the other videos. So that's all you guys got for me. Like I said, I appreciate all you guys. It's Friday. The weekend doesn't mean take off. You know, it just means go harder. That way you can start to separate yourself from the rest. While everybody else is taking breaks, you know, you're out here getting to it, whether learning, leveling up, doing whatever it is you need to do. So I hope you guys have a great weekend. You know, finish off this week strong. That way you can go into next week even harder. And then we just keep this thing up. So until next time, if you guys have any questions or anything else for me, reach out to me in the Well Squad group, please. Like I said, I make sure I get back to you guys in there. It's a lot harder on my social media. So like I said, I make sure I take care of the Well Squad members in the Well Squad. So you guys have a blessed rest of your day, and have a good night.